Hello, everyone. My name is Drew Dosick with Verified Investing, pro trader here. Man, what an awesome day here in the markets for a sell-off. A lot of red on the screen, but this was to be anticipated. I'm going to get into that here in a little bit, but let's just jump right into the heat map, straight where all the details are. All right, here you see we've got the Dow Jones down 0.3%, NASDAQ's down 2.23%, S&P 500 down 1.2%. U.S. oil had a decent day, up 0.8%. Then we have gold that basically was flat. Bitcoin seeing some pressure along with the rest of the markets. Look at these big players. NVIDIA down nearly 6% on the day. Google down 3.27. Microsoft down 1.43. Meta down 2.76. Amazon down 2. Big players are headed down, but we do have some green here that's hidden amongst all of this red. All right, so let's jump into the S&P 500. And I'll show you a little bit more about what I anticipated with this move. All right, so you see here, this is a massive decline that we experienced, but I could anticipate a bounce that was about to occur here. I've highlighted this parallel to you all before, and it's very important to understand. I go through time cycles. One of my specialties here at Verified Investing is dealing with time and understanding how that influences chart behavior. I actually produced an educational course called the Sleeper Hold, which this move up fits a sleeper hold to a T perfectly. So I knew today was going to be a down day on the market. I just didn't see this much selling pressure, and it also persisted all day long. So if you want to be able to learn how to navigate the charts and anticipate these sorts of moves, this big move, as well as this bounce, do yourself a favor, learn time counts. I go through it all very specifically in my Sleeper Hold course, Mastering the Overnight Trade. So we see here on the spiders, where are the spiders going to go next? Well, there's two options. Likely we could start consolidating amongst this 50% area of the parallel, or we can come down to this gap fill that's right around 564.13. We should have some support right there. Look at all this consolidation that occurred in this area. If we do have continued selling pressure, that will be the first stop. If we continue selling past that, down here at the bottom end of the parallel is where you're going to catch a lot of support at 548.82. That brings me into Bitcoin. As I've been telling you all, look at this chart with Bitcoin. This pattern that's developed is inside bar bearish consolidation. For any of the bulls out there, we needed to get up above $90,000. And as you see here, we have not done that yet. This trend line, if I zoom in closer, you see we've caught support every time we've tagged it and closed above this trend line. But now we've hit it so many times, it's becoming like Swiss cheese. It's becoming, has a lot of holes and is not that stable. So if we continue to put pressure on this line, my thought is Bitcoin's going to go down lower. And this bear flag consolidation has produced a measured move. You can see here, I've even measured it right there. We're bringing price down to 72,456. Does that mean price is going to stop there if it goes down? No, it doesn't. But that just means that's the first stop and first checkpoint for price action moving down. But I am anticipating price to go down further with Bitcoin. Next up, we've got gold. Now notice too, with the selling pressure going on in the market, gold maintained a flat day. And the reason that it did so is because folks are worried about the economy. A lot of CFOs are now, but the majority of them here in the United States are saying that we are likely to have a recession in 2025. And so what does that do? People run for a place of safety, which gold will collect those individual investors. So far, gold is staying up above this parallel. If I zoom back up on that parallel, you can see we've had a wonderful move up on gold. Now, should that sentiment change, I would see gold selling off, coming back into this parallel area. But if stagflation and recession still dominate discussion in the markets, we're likely going to continue higher with gold. Next up, we've got oil. Now, oil, this is a very important chart, and I want to point this out. Notice how price action, we came down beneath this inclining trend line right here, but then here on this day, March 24th, we pushed right above, and we closed above this trend line. Now, we teach this also here at Verified Investing, the confirmation signal. Well, today we confirmed above this trend line. Well, what does that tell you? That tells you that this trend line now is going to be support. It's where resistance flips to support. And so now the upward movement in oil could be a possibility And if we do go up on oil, the very high end resistance is going to be around $74, but we're actually right into resistance here at the bottom end of these pivots. And that brings me into my next session, where I really want to go over some education with you on day trading. We had a lot of day trades today, and they're very fun to do. A lot of people have the time to do it, but are very interested in learning how do you day trade. One way we do it, and you see this chart here with VRT, I took 2 day trades on this chart today. And one of the main reasons, 2 things I was looking at, we had a gap fill right here when price action was coming down, and you want to look for an extended move from the previous day's price action. This gap fill area would get to about 8 to 9% down on the day, which is a good extended move for this stock. If you look at the behavior of this stock, that's a big move. And so I anticipated first entry to be a gap fill, which is at 83.09. I zoom into the 1 minute chart because that's what we love to use when we're day trading. And you can see here, I've gotten different trend lines, and I've also got a Fibonacci retrace. So this 83.09 level was right here on this yellow trend line. I entered price just beneath this, and then we had a beautiful bounce up, enabling us and the members to take some profit on this trade. And then what did I do? I analyzed this chart further because I wanted another trade. I wanted to get some more money off of this move. When price action came back down, I had a Fibonacci retrace from the bottom end of this pivot up into this one pivot here, giving me a nice buy zone right down here towards the bottom, this 886 down to the full Fibonacci retrace area. I bought again here, and we took profit on the move up. Now, another day trade that missed me just slightly, and it mainly did because of the way the markets behaved, was for CHWY. So starting out again, we look at the daily chart and look at these declining trend lines as well as this inclining trend line. Whenever I have corresponding trend lines like this, that almost creates like a roof pattern that will block price if it's moving up. And so much like how a spider web would work, if on the underside it could catch price, and this is more like a roof, how you see when price moves up into it, it got rejected. And if I zoom in closer on the 1 minute chart, you can see here straight into the open, we had price action move up, surge higher, touching these 2 trend lines, then reverse course and pulled straight back down. I had an entry level just above this area in case price continued to surge, because this was not an extended move. If you look here on CHWY, this was up only about 5% on the chart. And so I was looking for a little bit higher to start inching into the position, but this ultimately shows the power of trend line analysis right here on the charts in a beautiful sell-off when the markets did take over. Now, here's another really interesting part, and I bring up Tesla. A number of weeks ago, I explained about how there were a lot of insiders that were in very large abnormal option call plays for Tesla with a break-even price of $283.50. I even remember when I displayed that and conveyed it to everybody on Trading the Close, I saw a comment saying, Tesla's going down. Don't you know who owns Tesla? And the fact is, with technical analysis, emotions don't matter. You need to get rid of those emotions to make profit, and almost just act like a robot, and then analyze the data, look at the charts. The charts are going to tell us what's about to happen. So we did have a breakdown, and knowing the data of big institutional players that were purchasing call contracts on Tesla with the break-even price of $283.50, I knew that we were going to have a reversal in the selling pressure. And keep in mind, those contracts expire the 3rd week of April. So there's still plenty of time left on the clock for Tesla to continue pushing up higher. But yesterday's price action got a high of $288.20. Anybody that had purchased those contracts could have exited and made a nice profit on those gains. But what do we have here further on Tesla? If you see here, we have a declining trend line here and a declining trend line here. This move up, again, back to the confirmation signal, confirmed price above this trend line. So that made this area, this trend line, an area of support. So back to day trading, let's zoom into the 1 minute chart and see what happened here. When price first initially came down, it pierced beneath but bounced up. But I want to bring your attention over here. Notice on this 1 minute chart, and if you're a fan of TA, you might be able to spot this right away without me even having to identify it. This is an inverse head and shoulders pattern. And you see the neckline highlighted right here with this declining trend line. When price action broke above it, I was waiting for a retrace, and then this area was a great buy area for a quick $3 gain per share, and you could have held it even a little bit longer and captured a few more dollars to get yourself a nice profit for the day. Day trading is very fast. This is why we move into the 1 minute chart whenever we highlight these things. And that brings me to the close. Thank you guys so much. Again, my name is Drew Dosick, Pro Trader here at Verified Investing. We have a ton of great information for you for future cycle dates. Speaking of which, I wanted to point that out. On the S&P 500, be anticipating coming April 14th, I am anticipating some very negative selling pressure hitting the markets. And what do I mean by that? This is a large time frame influence on the markets. But that doesn't mean that selling has to continue from this point forward. Historically speaking, right before tax day in the United States, we usually have an inflow of money to the M2 money supply. And that means money is going into people's savings accounts, potential CDs, and eventually also into the market. So generally during this time frame, we have some upward movement in the markets. And that could conclude with my major cycle date coming up on April 14th. So I anticipate maybe some choppiness to go around over the next couple of days, maybe even some increased buying pressure. And as long as that momentum carries up, that will fit ideal for a big sell coming in the middle of April. More to come on that in the future Trading the Closes. Again, my name is Drew Dosick. Thank you guys so much for watching. I look forward to bringing you guys more information and valuable data in the near future. You guys take care.